Last year was a great year. My foundation studies year at Trinity College was a real turning point for me. Living in a different country, a whole lot of new friends, and now this year at the University of Melbourne. Wow, a lot has happened. Trinity is so close to the center of Melbourne and public transport is right out the front. Trinity even helped find my accommodation off campus. And it's just a walk through a gate to get to the uni. It made my life so much easier. Everything else is so close too. The Victoria Market's just down the road. There's all sorts of restaurants close by and lots of parks and gardens. It is such a multicultural place and the people are so friendly. Looking back, I didn't know much about Melbourne when I arrived. But now, I really feel at home here. I remember the first thing I did was join one of the student clubs. There was so much on offer. I was always going to choose the cinema club. It was so much fun to get to know people from all over the world. I've made so many close friends. All of those classes I did. It was hard work, but so rewarding. And of course, drama was my favorite. I love acting, and the teachers were so cool. Just being part of the group, it taught me so much. History of ideas is another subject I loved, and it was always in the auditorium. Such a great place to learn.
Alright guys, I'll head out now.
Hey guys!
Oh, hi Chelsea.
Hi.
How are you?
I'm doing good, thank you. How about you?
I'm doing great. I'm about to head off to uni now.
Oh, okay.
So I'll see you guys later.
See you lecture.
Bye guys.
See you.
It's hard to believe we all met at Trinity just last year and are now at uni together. I was so lucky I managed to get a scholarship to both Trinity and the University of Melbourne. It really made it possible for me to study here. It's such a beautiful college. The old buildings mixed in with the new, the facilities in the classrooms and the common areas. I've met so many people here. There was always student support if I had any problems, and the mentoring program was fantastic. It was a great decision to come to Trinity. I worked really hard and it paid off. I got the grades, met the requirements, and that meant I could get into the University of Melbourne. I've been here a little while now, and I can see why it's ranked #1 in Australia. Cool location, right next to Trinity. It's awesome.
And a very good afternoon to all students who are joining us for tonight's live lecture, the next in the series of the Trinity Talks series. What an amazing group of lectures that we've had already. Okay, tonight we've got the next one for you, and it's going to be a really interesting lecture about accounting and economics, investment, and particularly looking at the stock market. It should interest all of you. It's going to be excellent. Shortly, I'll introduce you to our lecturer. Before I do, let me tell you a little bit more about Melbourne University and Trinity College. You probably saw some images on your screen in that clip of our amazing campus. It's simply beautiful. It is the best in Australia, and of course, the best place in Australia to study your foundation studies program and your bachelor degree. Let me tell you a little bit more about Melbourne University. Okay, here we go. Melbourne University, you probably already know Melbourne University, the #1 ranked university in Australia. It's been ranked #1 for well over 15, 16 years now. It continues to be Australia's best university to study at. We're currently ranked 33 on the international rankings. These are the UK Times ranking, which are very reliable and very well researched. So number 33 worldwide, #1 in Australia. But let's take a look at the specializations that we're going to hear about tonight. Let's have a look at accounting and finance and economics. How are they ranked at Melbourne University? Well, these are the discipline rankings for many of the areas at Melbourne University. Up the top here, accounting and finance. Okay, number 1 in Australia, number 18 worldwide. Okay, it doesn't get any better than that. Number 1 in Australia for accounting and finance. This is the QS World Rankings, by the way, which are very reliable, very well researched. Those of you interested in business and management there, also number 1 in Australia and currently ranked 26th worldwide. Finally, in that business area of study, we've got economics. So economics, number 1 in Australia once again, and currently sits at number 30 worldwide. Guys, if you are interested in studies in the area of business management, commerce, any of these areas, Melbourne University, there you have it, number 1 in Australia for all of those areas of study. So if you're aiming for these areas, it makes perfect sense. Melbourne University, we have the Bachelor of Commerce degree. This is the undergraduate degree for students who wish to pursue studies in this area. Students can choose from 6 major areas of study, as you see there on your screen, and it is possible to do a double major in many of those, including accounting, finance, which is a very popular combination, marketing and management, accounting and management. The choice is yours. Outstanding facilities at Melbourne University. This is the business school, number 1 in Australia, as I said before, and this is the lecture theatre that you'll be studying in. Simply amazing place to study if you are looking for an area of study in this area of business and commerce. Well, enough of that. Let's move on and hear and have a sample lecture in this area. I'm going to shortly introduce you to our lecturer tonight. She's got an amazing lecture lined up for you guys. Before we do, we've got a huge number of students joining us this afternoon. Students from Indonesia, the Philippines, I can see students from Vietnam, Singapore, Malaysia, China, even further afield from Sri Lanka, Bangladesh, India, and even beyond that, Korea, Japan. Wow, it's going to be an amazing lecture. Indeed, at Trinity College in our Foundation Studies program, which is the pathway program to Melbourne University, we have students from all over the world studying our pathway program, the guaranteed pathway program into the University of Melbourne. I can tell you more about that later on. Tonight, our lecturer is going to be asking questions, inviting your comments. She wants to hear from you. So if you would like to contribute your comments in tonight's lecture, please use the chat function, okay? In English, of course, this is an English lecture, and keep those comments respectful. That would be fantastic, but we do want to hear what you think. Put it into the chat. My colleague, Mr. James Curley, is again with us tonight. James, are you there? James, you're going to be in the Q&A. Can you tell students about that?
Good afternoon, Ben. Yes, and welcome everyone. For those of you who are returning after the last few, welcome back. New people, welcome to you for the first time. You're in for a treat. All of the investors out there are going to pick up a few tips of basic information and a few tips on how to make a lot of money. So we'll all be rich at the end. I will be looking in the Q&A box. If you look in that section marked with Q&A, that's where you send me questions about general things, not related to tonight's lecture. If you want to communicate with our lecturer and get involved in the topic tonight, as Ben said, use the chat box and put all your direct contact there. If you've got other questions, you know, if you'd like to apply for Trinity, or how do you do that, or are there scholarships, or, you know, when does the course start, etc. Things that are not directly related to tonight's content, put those details in the Q&A session and I will answer them in the background. So I'll get out of the way now so we can get things moving. See you all at the end.
Thank you very much, James. That's fantastic. James is behind the scenes waiting for your questions about other things, how to apply, as you heard, scholarships, entry requirements, accommodation, all of those other things. Okay, without any further ado, I've actually got my pen and paper ready to take some notes about tonight, because the stock market, who doesn't want to be successful in their investments? I'd like to invite our lecturer, Vandana. Vandana has been at Trinity College for many, many years. She's a highly experienced economist. She has taught students from all around the world, and she's an expert in this area. Vandana, thank you very much for joining us. It's great to see you. I'm going to hand over to you. Students, question and answer at the end. I'll see you there. Over to you, Vandana.
Thank you, Ben, and thank you, James. Welcome, everybody. I hope that you'll enjoy this session. I'm Vandana Wadhwa, and I'm an economist by training. I'm a teacher by profession, and I'm a stock market enthusiast by training. So before I start, let me quickly share my screen with you. And let me get started. So I'm going to share some very good news with you. And the good news is that you have inherited $100,000. And it really doesn't matter if you haven't, but let's assume that you have. So what are you going to do with this money? Of course, and you're going to spend, you're going to splash out on the Louis Vuitton bag you wanted, the Chanel perfume you wanted, the Dolce Gabbana jeans, and you're just going to spread good cheer, party, and that's perfectly fine. But you are smart, and you won't really spend all the money. You'll save a lot of it. So hopefully you will want to invest that money. You will want your savings to grow for you. So how do you think? And my question now for all of you is, where will you invest your money? I'll give you a couple of minutes, and I'm monitoring the chat. So come on, guys, where do you think you'll invest the money? Real estate, yes, wonderful. That really helps. The stock market, yes, Hannah, thank you. Yep, thank you, guys. Gold, that's wonderful. Thank you, Lily. Gold. Thank you, Josh. It's flowing so quickly. Thank you, Bitcoin, S&P 500. Yes, thank you. Thanks. Wonderful. I've got so much. You'll put it in the bank. Yes, okay. Thank you. In agriculture and in property, I would. It's really flying, so I can't read your names, and I do apologize for that. Thank you, gold and house land. Okay, let me get started. I did read about you investing in Bitcoin, that is in cryptocurrencies. I would like to tell you that I will not really cover Bitcoin today because digital currencies have a lot of disadvantages. And that's just my personal view. One, it's not legally money. It's not fiat money. Governments don't recognize it. They're only exclusively available in electronic form. So, we can't feel and touch them. They use blockchain where computers must solve equations to verify and record transactions. And this does use a lot of electricity, and it gets more and more expensive to use them the more transactions there are. And right now there are so many currencies to navigate, I don't know whether I should be buying Bitcoin or I should be buying Dogecoin or and it takes so much effort to learn how to use them. It's not easy to open a digital wallet. So I'm going to talk about the most popular investment options globally. And thank you so much. You did start me on brilliantly, because I'm going to talk about all what you have suggested you are going to do. So I'm going to talk about cash investment, investment in property, investment in the stock market, investment in government bonds, in gold. And none of you talked about art, but I'll very quickly also touch about investment in art. Now, but before I look at the different types of popular investments, let me share with you the rule of 72. The rule of 72 says that the time it takes for your investment to double in value is 72 divided by the rate of return on that investment. So keeping that in mind, let's start with cash. Of course, you suggested cash. Why not? We are all Keynesians now, and cash is king. Cash investments, when we talk about cash investments, they include everyday bank accounts, the high interest saving accounts, and they also include term deposits. In the latest Westpac Melbourne Institute Index of Consumer Spending Survey, which was released last week, 29% of the respondents, and about 30,000 Australians took this survey, said that they invest all their savings in the bank. So I am going to show you what really happens when we put our money in the bank and we want to grow wealth. So let's assume you're putting $10,000 in your saving account, or even in a term deposit. Doesn't really matter. The currency doesn't matter. Let's say wherever you're sitting in the world, cheers, you put $10,000 in the bank. First, I'll talk to you about Australia. Right now, globally, the cash rate, the official interest rate, is very, very low. It is the lowest in Australia's history. It is sitting at only 0.10%. The cash rate influences the official interest rate. The cash rate influences the nominal interest rate. The nominal interest rate is the interest rate we earn on our saving accounts, on our term deposits. So right now in Australia, the nominal interest rate is 0.06%. Wow. But let me just for convenience take it to be 0.10%. So the interest rate the banks are giving us are so low. A lot of people, just worry about the nominal interest rate. That's not the right thing to do. Students of economics never do that. We know what is important for us is not the nominal interest rate. What is important for us is the real interest rate, which is the nominal interest rate corrected for inflation. Every country in the world takes into account inflation. So, every country wants, or every country thinks that an acceptable rate of inflation is between 2 to 3%. So let me take inflation per annum to grow at the rate of 3%. When we put money in the bank, the real interest rate you are getting is not this 0.10%. It is this 0.10% minus the inflation rate of 3%, which is negative 2.9. You cannot grow money in the bank. After 1 year, your money will only be, your $10,000 would have gone backwards, and they'll continue to go backwards. This is a very, very grim scenario. Australians, in Australia, we all expect this cash rate to remain this low for another 3 years. That's what the RBA is communicating to us every day, that cash rates are low and are going to stay low. Now, let me not be a negative Nancy. let me talk about what's happening in Sri Lanka, in Bangladesh. And let's assume that you're earning a nominal interest rate of 4%. Again, conservatively, inflation is growing at the rate of 3%. And that's fact, it's data. All I will talk to you about today are facts and figures. Apart from the assumption that you have made money, you have come into money, there is no other assumption. And I'll dispel that assumption also very shortly. So anyway, you have put cash in the bank like you suggested. You are earning interest of 4%. Inflation is 3%. Your real interest rate is the nominal interest rate minus the inflation rate. Your real interest rate is only 1%. So at that interest rate, after 1 year, your $10,000 become 10,100. And look, after 10 years, your money has grown, but it has only grown to $11,000. So before I go any further, so quickly, if we use the rule of 72, how long will it take you to double your money if you leave your money in the bank? So the rule of 72, I'll quickly remind all of you, says the time it takes for our money to double is 72 divided by the rate of return on the investment. So 72 divided by 1, it is going to take you 72 years for doubling your money. So the point I'm actually trying to make is that you can't grow wealth. You can't become wealthy by leaving your money in the bank. And I hope mom and dad are listening, are tuned in. If they haven't, go back and ask them. Don't go now, but ask them after this, after we finish together. They would have not grown their wealth leaving it in the bank. So, today you have something interesting to discuss at evening tea or for dinner. So now, I beg your pardon, I'm going to discuss with you another very popular form of investment globally, and that is buying property. It could be residential property, it could be your first home, it could be investment property, it could be commercial property, it could just be a piece of land. I also in the chat saw that you said, you would want to invest in agricultural land, and I'm assuming you're from Vietnam. And yes, perfect, you could even buy agricultural land. So the average increase in house prices in Australia over the last 30 years, as commissioned by a report by our central bank, the Reserve Bank of Australia, has been 7.5% per annum. Globally, and I checked the index and I did averages, and I'll share with you the spreadsheets later. I looked at the property market for Vietnam, Hong Kong, Singapore, Malaysia, Indonesia, Pakistan, India, Bangladesh, Sri Lanka, China, Philippines, Taiwan, Korea, Japan. And I discovered that globally, the increase in property has been to the tune of 7 to 12% per annum. So now my question for you is, using the rule of 72, if we were to say that it takes, let's say, 7.5 years for your money to double in the, if we were to say that your property is growing in value at the rate of 7.5% per annum, using the rule of 72, will you please tell me how many years will it take for your money to double in the property market? Come on. Wonderful. Yes. Awesome, Olivia. Thank you, Sarah. Thank you, Tom. Thank you, Himesh. Thank you, Yauting. Thank you, Mutaz. Yes, it will take 9.6 years, and I'll also take 10. So not bad at all, Property, I personally feel investing in property is brilliant, is a smart move. But now, looking at your age and looking at the money you have for investment, it might not be enough for you to buy a house or a piece of land. And even if it is enough for you to, pay your deposit, 20% deposit on a home, on a 2-bedroom unit or an apartment, no bank is going to lend you the money to invest in property because 1, you're too young. 2, you don't have a full-time job. 3, you don't have stable employment history. And it's only the bank of mom and dad who's going to entertain you. So what I do want to share with you is that in Australia, people do share in Australia, people do invest in property shares, in property trusts, which are called real estate investment trusts. So, and they have over the last 30 years given a return of more than 10% per annum, but I'll talk more about it later. I also observed, I read earlier on that you did tell me, and I am checking your questions as I move on. So yes, Josh, our credit rating does affect the money we can borrow, and the business's credit rating does affect the rate of return on their investment. And globally, in every country of the world, all top businesses, especially all those which are listed in the stock market, have a credit rating and documented credit history, which you can easily find on ASX in Australia and Tokyo SC if it was Japan. So now I will, coming back, I hope I've answered your question, Josh. Coming back to the market, coming back to the next form of investment, I'm going to discuss investment in gold because that's what you talked about. Gold is a very, very safe investment. And globally, during the last 50 years, gold has averaged an annual return of 10.6%. So if I were to use the rule of 72, value of gold will double every 72 divided by 10.61. Yes, brilliant. Thank you, Yauting. 6.8 to 6.9 years. The interesting thing about gold is that last year, the annual average return of gold globally, I'm talking global figures, was 25%. It was the second highest return among a range of asset classes, just behind silver. Maybe the reason was that, earlier in the year, people panicked and put all their cash in gold. Gold really seems to me like, again, another very good investment to grow wealth. And I can tell you that as of 3 p.m. today, 100 grams of gold, that the slab of gold, 100 grams, cost $5,600 US. So investing in gold, I think, is definitely not a bad investment. And it's also not a bad investment if you don't want to really buy a chunky piece of something you can't use. It's okay if you want to buy yourself a gold chain or invest in gold in this form. So yes, gold is a good investment, and antiques and art have proven to be a very, very good investment over the years. They have returned over 50 years. The average annual rate of return has been 6.3%. So using the rule of 72, if you were to invest in art, and I'm not talking about, Picasso and Monet and Da Vinci, I'm talking about, reasonable art, upcoming artists, your average rate of return is 6.3%. So again, using the rule of 72, I know you're so quick. Quickly tell me, how many years will it take? Yes, thank you, Rashid. Thank you, Kong Tuan. Thank you, Lily. Thank you, Hannah. Thank you, Fung Tri. Thank you, all. So it is going to take 72 divided by 6.3, 11.5 years for your investment to double. The reason I'm talking about art and antiques is that last year alone in 2020, the online art sales hit a record high of 13 billion US dollars. They doubled in value from 2019. This is again relevant to you and me simply because of border closures, travel bans, curfews, and working from home. People have been splashing money on beautifying their homes, you know. I am now going to talk about the most popular form of global investment, that is the investment in stocks and shares. I stand corrected when I say the most popular. It is my personal opinion that, you know, it's my personal view. It's a value judgment. So for the last 100 years, the annual rate of returns on shares have been 10% per annum. And I do want to say, and that's I better put this disclaimer that returns can and they do vary greatly from one year to the next. And an average year never actually generates an average return. So again, using the rule of 72, Hemish, your question is wonderful, but I'm losing my concentration. I can't answer and talk. So let me talk and I'll answer your question at the end. So now using the rule of 72, it is going to take your value, your investment in the share market will double every, come on, who's going to tell me? Yes, wonderful, brilliant. Thank you, all of you. It'll double every 7.2 years. So I do want to share with you very, very quickly that, you know, this year I've got teenagers, I've got kids your age. I think I understand your pulse a lot. So this year, in February, my daughter bought 100 shares of Apple. She paid $121 for them. So she has been taking driving lessons and she has just got her P plates and now she wants to buy a car. So last week on Friday, she sold her shares. She only bought 100, so she invested $12,100 in it. It wasn't my money. She's studying and she's working part-time and she had saved money and she just keeps dabbling here and there and then the money grows. So she sold them for $142 each. She bought them at $121. She gained $21 per share. So she made a tidy profit of 2,100. So 2,000, a profit. So her portfolio grew, or her investment grew 17%. So share market is another thing you should consider. So I would like to ask you, should you be investing all your savings in the bank in cash? Or should you be investing some in the share market, some in gold, some in art? What do you think? Yes, I totally agree, Josh, that you can't put all your eggs in one basket. You know, you need to diversify and yes, Lily, as you say, put a little bit in every basket. So you need to work out, you know, what portion of your savings you will invest in shares, you will invest in property, you will invest in cash. And this is called asset allocation. I have not discussed investment in government bonds simply because I know Asians love their government bonds. So after my talk today, and I'm happy to communicate with you one-on-one if you want to send me emails later, but after my talk today, ask your parents and they will tell you, I bet all of them have government bonds, because, you know, I do hold government bonds issued by Federal Reserve, issued by RBA, issued by the Bank of Thailand, Bank of India, because I've lived in those countries. They are safe investments. So I'll skip that and let me continue. What I would like to discuss now with you is that you have your savings, so you're going to plant the money in the stock market. So hopefully it is going to grow and you can harvest wealth in a couple of few years' time. So what I'm going to do now is I'm going to discuss with you, what is the stock market? How does it operate? Why should you put money in the stock market? So, all these questions associated with stock market is what I'm going to do now. And I'm going to I'm going to start with the basic, the difference between stocks and shares. I shared with you that my daughter had shares of Apple. So that means she owned stock in Apple and she had 100 shares. So that is the shares. So the exact amount of ownership is the shares and the broad concept of ownership is stock. So now, what are shares? Shares are something which are sold by a company to raise money to fund their operations. And when companies, they decide to sell shares of stock to the general public, they will conduct an initial public offering in the primary market. And investors love to buy, especially for Apple, investors love to buy initial public offerings in anticipation of their money doubling in value and earning dividends. So what are shares? What I'm trying to tell you is that in 10 years from now, if you have a brilliant business idea, you want to start a business and you don't really want to, and the bank is happy to lend you money because they think you have a super duper, super hit idea, but you don't want to borrow the money from the bank. So what you should do is go and list your company in the stock market, not directly in the stock market, with the financial regulatory agency in your country. In Australia, that's the ASIC. It's called Australian Securities and Investment Commission. So in Australia, I can list a company, my business, for about $1,600, $1,700. List your company. I have done that, but I have not ever tried to float it because that brilliant idea, I'm waiting for it to come to me. But if you have a brilliant idea, what you can do is after listing your company, you can advertise in all the major newspapers locally and start issuing shares. If people feel that your company has potential, they are going to buy the shares. So I hope you understand what are shares. Shareholder is, of course, people who buy shares. And share portfolio is another name for a person's shareholding. And a share portfolio may only contain shares in 2 different companies, and it is still called a portfolio. So my daughter's share portfolio only had shares in 2 different companies, a dud one, Telstra, and Apple. So it's still a portfolio. So the next question is, let's talk about Apple shares, because I still think they are a good buy. Today, they are trading for around $142. If you chart, and of course, time will teach you to do that. If you make your Excel spreadsheet and you enter the price every day, you can set up an alert and you can predict when the next dip would be. So I do think 142 is slightly high. You could buy them, later towards the end of the year for 130 or something, and then hold on to them, because I think in 3 years, if my genomics if my economic understanding and accounting understanding tells me anything, I think Apple shares by 2024. It's 11th October 2021, 11th October 2024. They should be anywhere between $370 to $380. So I'm waiting for that, or how should I say? I don't really want to invest in Apple shares right now, but I'm happy for my kids to do it at $130 a share. So coming back, how do you buy shares? You want to buy Apple shares. So will you go to Cupertino, the headquarters of Apple in California's Silicon Valley, to buy shares? So will you, plan a trip to USA? And then after buying the shares, since you are there already, you'll also go to Disneyland and Universal Studio. Is that how you buy shares? And as exciting as traveling sounds right now, you all know that you can buy shares of Apple from the comforts of your own home through a stockbroker who has access to the US stock market. And the only advice I can give you is look for a platform with low brokerage and low foreign exchange fees. So sitting in Australia, I do trade in American shares. I use eToro. So you can look up eToro. Is a very good, for me, it works very, very well. And yes, I read about Robinhood. Yes, you can. So how do you buy shares? Of course, two types of brokers are what you can use. You can buy shares by making use of online brokers or by making use of full service brokers. Online broking services that you open an online trading account, you make your own investment decisions, and you pay a very low fee for using somebody else's trading platform. So a full service broker is a broker who not only does the trading for you, but they also give you advice as to what shares to buy. So 20 years ago, when I started buying shares, I always used a full service broker. I learned a lot from them. And then once, I got a hang of it, I understood the market, I learned from my mistakes, I stopped paying a full service broker, and now I do it myself. Now, if you were to use a full service broker, they are going to charge you a fee, and they're going to charge you a commission, which is anywhere between 2.5% to 0.1%. Why I'm saying 0.1% is that if you make a large trade through them of a couple of few $1,000s, they will charge you less. But if you only invest $5,000 through them, it's not worth it's of course worth their time, but then they're going to charge you high brokerage of about 2.5%. Now, where do you buy shares? Of course, in the share market and in the stock exchange. So I'm going to talk to you about what is the stock market, the share market, and what is the stock exchange. What is the difference? So stock market is a market which brings together the buyers who want to bid on a share and the sellers who want to offer their shares for sale. Now, the reason why we buy through the stock market is because it's a very secure, safe, regulated environment, and market participants can trade in not only shares, but also all other eligible financial instruments with confidence and with zero to very, very low operational risk. Stock market, as we have already discussed, is made up of the primary market, where companies initially list themselves and make initial public offers. And then it is made up of the secondary market, where buyers and sellers interact after the initial public offering closes. So many people, think, and I have no problem with it, that stock market is the secondary market. But in my opinion, stock market does include both the primary and the secondary market. Stock exchanges are a part of the overall stock market. They are the most important component of the stock market. Almost all major stock markets across the globe now, they are operating electronically. So the stock exchange maintains the trading systems, which efficiently manage the buy and sell orders. Stock exchange very often creates and maintains various market level and sector specific indicators, like the New York Stock Exchange has the New York Stock Exchange Composite Index, which provides a measure to track the performance of the top 2,000 companies, both American and non-American, listed on the New York Stock Exchange. So these are the topmost, the 5 largest stock exchanges on the basis of market capitalization in the world today. And we have the Shanghai Stock Exchange and the Hong Kong Stock Exchange in the top 5. So why do people buy shares? You must be thinking, okay, and you might have a very, very good idea. The reason people buy shares is, you plant your money in shares is because you want it to grow. And how will your money grow? Every year you will get dividends. You will get them twice a year. You can take the dividends or you can reinvest the dividends in getting new shares. Hopefully, there will be capital growth. And we have seen that the share market has grown globally at the rate of 10% per annum. People want to invest in the share market because you have control over your money. It is very, very flexible. And of course, you have planted your money, it will grow, and then you will harvest it, you will create wealth. And I do want to tell you that Ben introduced this talk saying that, oh, we are all going to make big money after today. So I would like to tell you that it is this, it is this lure of big money which also pulled me into the stock market. But I would like to say you're all young kids, so I better tell you, making money is not easy. Making money needs a lot of patience. It needs a lot of discipline. It needs a lot of reading and hard work. It needs you to do a lot of research. And you need to have a very, very good understanding of the stock market. I don't believe there is any short formula for making money in the stock market, for becoming wealthy, for being very successful. But I will share with you 7 things which I have learned the hard way and I follow. 1, don't have the herd mentality. I try to make my decisions myself. I always listen to everybody. I read up a lot. Maybe that's my pastime. I have never watched television. I mean, I don't regret it. If you were to ask me what is happening in Hollywood, Bollywood, I have no clue. But anyway, what I'm trying to say is avoid the herd mentality. Invest in a couple of few shares. So, diversify your portfolio. Invest in technology. Invest in healthcare. Invest in services like old age homes and childcare centers. You must diversify your portfolio. You must have realistic expectations. Everything which goes up comes down. You might lose your money. So only invest money if you have money to lose. Only invest in things you understand. Don't invest because, James, my best mate invested, so I will run and invest. Or Ben, my best mate invested and I'll invest. No. You have to be very, very disciplined. You have to make your own spreadsheet, which I know youngsters are brilliant at. But you have to continuously educate yourself and you have to, give it time. And when I say give it time, you have to spend time on education, but you can never time the market. Don't try to time the market. Don't invest in the stock market thinking that, okay, my money will double in 3 years. I have to say, stock market has been very kind to me. Yes, my money has doubled many times in 3 years, but I have also made a lot of big losses. And I did run a very successful trading company in Thailand. And in another life anyway. So, all right. As I take a breather, I hear you're thinking, okay, I'm just thinking what you are thinking. And you might be thinking, okay, she's making little bit sense. Okay, I might invest, some of my savings in the share market. But right now I am so young and I have no clue, what shares to buy. What shall I do? What is it that Warren Buffett said? And he says a lot of very, very good things. But I know all of you must have heard. He said, be fearful when others are greedy, and be greedy when others are fearful. What I really want to tell you is that in 2007, Buffett made a $1 million bet. And he said that a bundle of actively managed shares would be worse off than if you put the same money in the S&P 500. And thank you. I know Josh, I think, told me earlier that it is America's market index. And he said that, okay, instead of you doing all the hard work yourself and investing yourself, I'm making a bet. Don't do that. Just go and put your money in S&P 500 market index for 10 years. He argued that if a fund simply just mimics a major index, it will deliver better returns than a fund actively managed by individuals, who put in so much effort and so much time. And you know what? In 2017, Buffett won that bet. So now, which brings me to the next question, you must be thinking that, okay, and at your age, maybe that's the best thing to do, that instead of investing in shares individually, you just invest in an index fund. So you must be thinking, what is an index fund? Let me try and explain to you. I always try to understand things. So what is index fund? For me, it is a fund which follows the market index. And what is a market index? And as I close my eyes and think about, Australia, market index is a collection of stock that are listed on the stock exchange. So Australia's most well-known market index is the ASX 200. So the ASX 200 tracks the performance of the top 200 Australian listed companies weighted by their market share, weighted by their market capitalization. And so many of you have talked about S&P 500. That is the S&P 500 is one of the top American indices, which tracks the performance of 500 American listed companies. Index fund, I think, is very, very good for beginners. And even, now I've come a full circle. I'm also seriously, actively considering index funds because they are low cost, low risk. So the first question is, when you want to invest in an index fund, you have to pick the index you want to track. Since I am now, in Australia, I have picked the S&P. I have picked the ASX 200 or the ASX 300. I personally think S&P 500 is also very, very good. Then what you have to do is that you have to choose a fund that tracks your selected index. So those of you who want to pick the S&P 500, you will have to choose a fund which you might have, and I Googled before I started this lesson, there are 6 or 7 choices. There are 6 or 7 active funds, all tracking the S&P 500. So go with the index which has the best reputation. And for me, it's always been Vanguard. Even for America, even for Australia, if I were to invest in index funds, I would use Vanguard. And Vanguard, again, look it up, is a multinational, has trading platforms in most Asian countries. And then you buy shares in your fund. You have the choice. How do you buy shares in the index fund? If you have the knowledge, you can open an account directly with the mutual fund company. Actually, I should tell you that what I'm talking index funds. Talk to your parents later. They are called mutual funds in most Asian countries. And in Australia, they're also commonly used interchangeably with the exchange traded funds. So if you want to buy shares in an index fund, you can typically open an account directly with the index fund company that offers the fund, or you can open a brokerage account with a broker who will give you advice and also invest the money for you. So many ETFs listed on the Australian Stock Exchange, as I told you, are index funds. And index funds globally are also called ETFs, are also called mutual funds. And ETFs are available for a range of asset classes, including Australian shares, international shares, property shares, government bonds. So if I were to look at the performance result of these asset classes tracked by Vanguard Australia over 30 years, if somebody had started, if James had started with $10,000 in 1991, and we assume he paid no tax because he's a very young, healthy man, he doesn't really, he's growing wealth for his retirement, and he reinvested all the dividends he got. This is the performance that the Vanguard chart index shows. Look at this green line. And it shows that, American shares have performed the best with a return of about 10.8%. Then look at the performance, this mustard, this yellow line. Look at the performance of Australian shares. They have performed well also as an asset class, with an annual return of 9.7% per annum. Where else can you grow that kind of money? Where else can you, generate that kind of returns? Listed property trusts. So yes, before you ask me, you can buy gold ETFs, you can buy property ETFs, you can buy art ETFs with your savings. So listed property trusts, if you look at this pink line, have generated a return of 8.6%, only 1.1% behind Australian shares. Australian government bonds have also given a pretty decent yield of about 7%, though I would not be touching or investing in bonds now for a couple of few years. So why do people buy, why do investors buy index funds? Of course, because they cost less. If it's a passive fund, it requires, very little legwork. So it charges, and they just, if you're, investing in an index fund, they are just following the market index. They cost very, very less. They have higher returns. They offer you portfolio diversification. You can invest via an index fund. If you want, you can just invest in gold ETFs. But if you want, you can invest in ASX 200, the top 200 companies. So there is enough diversification, easy to invest. They are much safer than doing it alone, than being alone. So yes, you can invest in index funds. So very, very quickly, I'm so sorry. I'm going to quickly wrap up, but before I wrap up, I do want to tell you that studying accounting, studying economics helps you understand the share market. How, you ask? If you study accounting, you will, learn to read the prospectus. So you learn to read not only what's written in this, but you learn to read what's not written in it. You will learn how to construct, how to interpret, how to analyze the nuts and bolts of financial statements. And by financial statements, I mean, you learn how to make and read, analyze balance sheets, income statements, cash flow statements, and you learn how to compare industries in the same industry. So you'll if you want to invest in foreign shares, you'll be able to have a good understanding or formulate an understanding that today, should I be investing in Amazon or Alibaba? It's sitting in Australia, or where you are sitting. Again, study of accounting helps you to understand the basic terminology, like what are the earnings per share, the price earning ratio, and the dividend yield. Since I'm just thinking, should I tell you a little bit about it or not? I know I'm running out of time. Ben took up so much time introducing, me in the beginning. Anyway, there is no point, and I don't think it'll help you if I read for you, what is the earning per share, and what is the price earning ratio, and what is the dividend yield, and it'll make no sense for you at this stage of your learning. So I think I will skip this bit. But as a student of accounting, you understand, and you don't have to learn these things. You deal with them 5 times and it just becomes habit. You just, look at a share portfolio and you understand what is happening and should you be investing in the company. Economics also helps you understand a lot about the share market. It makes you it gives you a very good sense of the stock market crashes and booms. If economic growth were to slow down and unemployment rate increase, and globally economic growth has slowed down, productive capacity is going down, if firms don't produce or produce less, jobs will be lost. If jobs are lost, people earn less income. If people earn less income, they spend less. So aggregate expenditure and aggregate demand is all falling. As a result, when people don't have income, demand for quality stock will decrease. Supply doesn't decrease. So the share market might crash. And that's what happened last year. So economics helps you understand the nuts and bolts, if I may say so again, of the share market. And it also helps you understand and predict what the government is going to do now. And globally, as I'm talking, governments all over the world are using expansionary budgetary policies and expansionary monetary policies. So they are, I have to, since I'm trying to wrap up and I do want to tell you that studying economics really helps you to understand the share market. What happened last year was that in January 2020, end of Jan 2020, the World Health Organization declared that there is a global pandemic, COVID-19, and there were, thanks to them calling it out, there were global economic shutdowns. What we saw last year was in January and February, there was panic buying. Everybody wanted to, buy toilet paper and necessities. There were supply disruptions. People really got very, very scared, and people started holding on to their cash. And as a result, on 20th of February, and I think, no, it was on the 21st of February, stock markets all over the world shut down. So last year, we have had the shortest stock market crash, which started on the 20th of February and lasted till the 7th of April. So since mid last year, the stock markets have recovered. So when the stock market crashes, it's the bear market. Now the stock markets are recovering. Is it a bull market? I won't really call it a bull market, but the stock markets are recovering. So what I have personally learned this last year, and I would like to share that with you because that should really help you young people, is that the stock market is a forward-looking market. The reason it is performing okay, and I stop short of saying that it is performing well, because it is. Despite economic growth slowing down, despite labor market being not in a very good place, despite people losing jobs, despite people earning less, is that the simple reason what has happened is that the stock market is more about future expectations than about current conditions. So many people have started investing in the stock market. Many new investors have entered the market. I really don't have the breakdown according to age group, but in the last 6 months, S&P has commissioned a study, and they have realized that in the last 6 months alone of this year, about 10 million new investors have entered the stock market. And people are really investing a lot in technology shares, think Zoom. They're investing in e-commerce, they're investing in medical research and development shares. I also believe, and again, that's what I'm tracking, that I have observed that there is a massive increase in the initial public offerings, meaning businesses are very, very hopeful for a bright future. So they are investing. So I'm going to end on by asking you, or, I always anticipate, students always ask me, oh, what should I do? You have talked, 40 minutes is too little, 40 hours might be enough. So I do look forward to holding another session soon, but it's a very open-ended question. What should you do? Number one, please don't wait for an inheritance. Start saving your pocket money. I am assuming you already do save. Talk to mom and dad about the different ways you could invest your money. Start to build wealth. Even $1,000 is enough. Don't worry, don't wait or don't rely on the inheritance you will get from mom and dad. If mom and dad are worth $5 million, you owe it to yourself. Your net worth, by the time you are their age, should be at least 6 times $30 million. So what I'm trying to say is, please I believe you should all start investing. Start investing early and keep investing regularly. There is no easy way of making money, but stock market or investments are good because they keep your brain very, very active. You learn to think outside the box, and as you think outside the box, you learn a lot. You build your human capital. I would also like to tell you that nobody knows anything about everything. Nobody knows as much as you people think they know. So use your Apple and your BlackBerry very responsibly. So, when you surf the web, try also to surf the latest trends in the global markets, not only fashion, but also the latest trends in finance. So with this, thank you very much. I have finished my talking. I'm happy to answer your questions now.
Okay, Vandana, thank you very much
Sorry,
for
Ben.
thank you very much for a really super interesting lecture there. So much information about investing, really interesting, and for these young people, it should be the source of great interest and inspiration for the years to come. I know that there's going to be lots of students here, Vandana, who are aiming for commerce and business. So I'm going to open the Q&A now. Please, students, raise your hand, your virtual hand, if you would like to put a question directly to our lecturer. We've got Tu Tao, who's going to ask the first question. Go ahead.
Okay, hello, good afternoon. Hope everyone is doing well today. My question is, who should do business valuation? Should it be internal by the management board or the CFO, or should it be an external appraiser, business advisor, accountant, consulting firm, especially for startups?
So thank you so much. That's a very good question. Usually business valuation is done by external candidates. There is a pool of external candidates and you can, put forward your preference, but business valuations are done, especially if they are for registering with financial institutions like Australian Securities and Investment Commission and Australian Prudential Regulatory Authority in Australia. So you must have financial regulation companies in your respective country, especially if they are to register, if they are being conducted by them, the valuations, it is by an external board.
Thank you very much, Tu Tao. Next,
and also for startups. Yep,
we have Joey Adrian Pernomo. Go ahead, Joey, ask your question.
Yes, thank you. From your opinion, which one is better, passive income or active income?
Oh, wonderful. You really think deeply. I think both. I need an active income. So, I'll be working till 80, 90. And passive income too, to maintain my lifestyle, or maybe, just to feel that false sense of security. Because yes, money is important. And I'll stop at that, Ben. Okay. Did I answer your question? Both are important. So you must have both active and passive income.
There we go. Look, I might just use this as an opportunity to jump in here. We've got some great information from our lecturer tonight, but please, this is an educational lecture, and we are certainly not advocating or providing financial advice. Oh, yes. Very important to say that any of the information used tonight in our lecture has been purely only for educational purposes, and it does not constitute financial advice.
Thank you so much. Sorry, Ben, forgive my bad
okay. Let me press on here because we've got some more questions, Vandana.
Quite a few coming up. Can I just sneak one in? Because I think one might have left us. because he couldn't wait. But he did have an excellent question that he put in the Q&A, Vandana. Juan wanted to know, which is best when you're running a business? Is it better to borrow money from the bank for investment, or is it better to sell your business stock, your shares on the market to buy in, to bring in revenue that way?
All right. So again, not everybody can register their business in the stock market. To be, to be able to floating shares is very easy, but attracting people to buying your shares is not that easy. James, do I make sense? So, I mean, if you have a wonderful product and and you can sell it to the people and people will buy it, definitely list your company in the stock market. And you'll never know till you list it. And registering a company in the stock market is not big money in any country in the world. So you should try that. But of course, individually we know whether we have that great an idea or not.
We're going to move to a couple more questions before we wrap up. We've got one here from Kanika. Kanika, go ahead. I've unmuted your microphone.
Hey, so I have a question. Do you think that there will be a post-pandemic stock market crash like in the 1920s?
Again, Kanika, that's a very interesting question. There was a market, crash last year, the shortest crash for about 100 days. I don't think we will have another correction like that in the forthcoming future, but that's just my personal opinion.
Fantastic. Thank you very much for a great question there, Kanika. And I'm sure that if anyone had the definite answer to that, they would be a very wealthy person predicting what's going to happen in the future. But an excellent question. Thank you very much, Kanika. We're going to take two more. Himesh, who joins us every week. Himesh, go ahead. What's your question this week for our lecturer?
Hi everyone, I hope you're all right. Hi Miss, so I asked you this question earlier and you said you asked me to ask you again later. So I was reading this article that was saying that companies and generally anyone who invests, it's always best to put your money into a company that you own so that you can use the company's, so that can be affiliated as the company's revenue and you can spend as much money as you want to avoid taxes. And in addition, they said the best type of company is a charitable company because generally charitable companies are considered as non-profits. Is it actually, just out of curiosity, is it beneficial to do something like that? Or would you think that for a person who wants to keep as much money as they want, it's a bit on the more far end risky side of things?
All right. Again, it's a very good question. But again, as Ben pointed out, I'm not here, to give any financial or any advice. This is a very tricky question. And all I would like to say is ethics first.
It's a very safe response there, Vandana. We might move to a couple, just perhaps one more question and then close. We could go on all evening here. There's so many questions. The board is lighting up with them. And it shows us that this area is a very popular area of study for our students. I'm going to choose Mutaz Siaputra. Go ahead, Mutaz.
Hi, I would like to ask some question regarding what is happening currently in Asia, right? And in my country, Indonesia, we're just experiencing the first technological tech company IPO. What are the things that we shall done to accept the transition to more and more to welcome more and more technological companies entering our market?
All right. Another very good question, but I'm really not sure I understood it very well. So if you'll please help me out here. So what I understood is that more and more technological companies are being set up in Indonesia. Is that right?
Yes, yes, definitely. And what are the things that we shall do here?
A lot of multinationals are, setting up their businesses because I guess lower costs of lower labor costs and lower cost of running the business. So they are setting up their offices in Indonesia. Is that what you said?
No, I mean in terms of the IPO itself, right? More and more technological companies are entering the
Market, all right.
the stock market. And what shall we do? What shall we do to accept the transition?
So again, I'm assuming if you feel that the company is good, if they have got a good reputation, if the local press and the government, I'm assuming supports them. Otherwise, they would not have given them the license to offer IPOs. If they're offering the initial public offering, it tells me that the government and your financial regulators have vetted them, have done a thorough check. So if you feel that it is good value, buy it. I would.
There we go. Thank you very much, Mutaz. And greetings to all the students from Indonesia with us tonight.
Yeah, thank you so much. I hope I answered your question. Did I?
Mutaz has just gone. I would have to activate his microphone again, Vandana. I think at this point, we're going to wrap it up for this evening in Australia, in the afternoon, wherever you might be. Students, thank you very much. A very interesting area, very topical, and also a very popular one for students aiming to study their bachelor degree. And again, Melbourne University are the specialists in the areas of accounting, finance, economics. We have world-class programs in this area, and certainly we remain the #1 university in Australia to study your bachelor degree in these areas. Trinity College, of course, located inside the campus of Melbourne University, is where you can do your foundation studies program to get your guaranteed entry into the University of Melbourne. We're accepting applications right at the moment for 2022. 2022 is looking very bright. Lots of discussion in Australia at the moment about the borders reopening, lots of plans happening, and we're looking forward to welcoming students back onto our amazing campus in 2022. If you would like more information about how to apply for Trinity College, my colleague will put our contact details into the chat right now. Thank you, James. If you do have any questions about applying, scholarships, entry requirements, send us an email. We'd love to hear from you. But otherwise, thanks for joining us. Next week, we've got an excellent lecture lined up for you. Next week, environment, development, and design. And we're going to hear all about sustainability, sustainable architecture, and the environment. Not only will you hear next week from one of our leading lecturers in environment, development, and design, but also 2 of our alumni students who have since graduated from Melbourne University and are now working in the areas of architecture and sustainability in Japan and Australia. Join us for that one. And if you haven't registered, get on and register. Places are filling up very quickly. James, thank you very much for helping out with the questions. And once again, students, please join me in thanking Vandana for an excellent lecture tonight, and so informative and interesting and important to us. Thank you very much, Vandana. And
thanks for joining us.
And can I also say thank you, Ben, and thank you, James. Thank you. You do an amazing work. You do all the hard work. You coordinate it, you anchor it. So thank you, guys. A big shout out. Come on.
Thank
Yay.
you. Very good.
Thank you.
Students, we will see you next week. Bye
See
for
you
now.
next week. Yep.
Join us then.
Thank you. Thanks.